All right, so I'm gonna continue from yesterday's call. Start with a daily chart as usual. So the XY, first up, we were looking at the likelihood of price running below this low and potentially going lower. What we have now, prices trade below the low, tag the 110, and aggressive retracement. Let's switch to M15 for a second just to see when that happened. Gives you a better idea of what to expect. So we traded down to the 110 and below the daily low right here. I was yesterday doing about noon, thereabout. Price played around for a while. Low, multiple candles closing below the low. So this is accumulation right here. Then today, roughly about 2:30, London, price traded higher. Okay, so London session started the day bullish. We have a huge displacement, the high broken, lows right here, housing liquidity. Why that accumulation? I'm pausing, trying to word my response carefully. Look at the market structure here. Are we pushing one-sided here? Whenever price is not, clearly one-sided, it's contained in a range. Usually when price is contained in a range, it's accumulating. So it creates a high, creates a low, then the bulk of the price action or the delivery afterwards is staying between there. So consolidation, accumulation. Yep. So we'll get to M15 in a second. All right, so first thing we're expecting, this got it. So now we're retracing. If price is retracing as usual, where is the draw on liquidity? It could go as high as this. There's a huge down day right here, which means all of this is an imbalance. All of this day is low. So the first place to look at would be consolidation, accumulation, same thing. Here. This would be the first place to look. Right here, because this is a huge down day, a whole lot of displacement. We could go as far as to drop to a lower time frame and take a look at the structure. Relatively equal lows, huge displacement here. Not a lot of imbalances inside here to look at. We have a lot of wicks inside here, which means 111.3 could be the high of the day, and then we continue going bearish. With news coming up, I don't think that's far-fetched. We have roughly about 4 and 5, 9 minutes. So let's see if we can run through the daily charts before. But I'm still looking for lower prices on this guy. What changed my bias? Okay, so let's say I'm looking for lower prices, even though we've taken a low right here and we're retracing. Because it's the first week of the month, I don't see anything wrong with price going lower to accumulate at the start of the month. What would change my mind? Since this is the last up candle before the impulse, that high should stay intact. All right, so if news spikes take this day here, that doesn't convince me that price is bullish. All right, after liquidity gets taken, the next thing on is usually an imbalance, because price, if you take a look at every single thing that price does, and if you follow ICT long enough, you'll understand that there's only, or let me not say understand, you'll accept there's only 3 things price is doing at any point in time. It's creating an imbalance, rebalancing the imbalance, or taking liquidity. And once you push beyond that initial understanding, you'll remove it to only 2, creating imbalances and rebalancing an imbalance. Because whenever a price is taking liquidity, it's usually expanding. And expansions like this always creates an imbalance. There we go. NAS. Okay. Upside draw on NAS was here for us yesterday. Still haven't gotten there. I think lower time frame had a whole lot of open imbalances. Retracing back into this candle, perfectly logical. If it wants to push lower as well, perfectly logical, because this is a very large candle. What changes my mind? Now there's a very large range to change my mind. This is still in retracement conditions unless it takes this low right here. Huge fair value gap inside here, so I think that's a very large, maybe about 100, 200 points. Yeah, 100 points of opportunity below 11.4, all normal. This is a daily chart, so makes perfect sense. AU. Okay, we're back inside the order block here. We've taken Tuesday's low. Did I get that right? Yeah, Tuesday. So this is a weekly profile. Yeah, it's gonna be on YouTube. It's a weekly profile that might not be one that you're used to. Pretty simple idea, really. We take a look at the relationship between Monday and Friday at the start of the week. We anticipate and wait for what Tuesday does. And that gives us a very good idea what Wednesday, Thursday, Friday should do. Sell side, buy side, dealing range, retracement back inside the dealing range. With the news coming, it opens the door for wicks, but not bodies, to trade below here. I'd rather not see that happen. I'd rather see them stay right around these lows, these bodies right here, and then go higher. Going below this, I think is unwarranted. These bodies here should be rejection block and then push higher, but let's see. That's what I'd be looking for. Absolutely nothing to talk about this guy. Really, nothing at all. I'm waiting for the JPY stuff to get interested. Everything says this should be going lower though, in my opinion, but apart from these highs being taken here, this candle tags it here, there's nothing enticing for me about this pair. I'm carrying, I'm holding some amount of resentment because I missed this and then all of that happened. So yeah, I'm human. Gold, from yesterday, we're looking at price trading up, coming back to this low. That's what that line is for. Very nice to see it. I'm gonna assume that it happened around about London as well. This is, yeah, 2:15 London time, 2:45 London time. It's pretty much the same fractal like DXY M15. So we're trading lower with DXY pushing higher. Where's the liquidity? These lows, these lows. This area here, the last high that we broke through here, had a whole lot of imbalances. So I wouldn't be surprised to see this happen. I don't want to see it happen yet though. I'd like to see them continue trading higher first, so that once the retracement is done, I can enjoy some of that down movement. Why extend this? This was yesterday's call. GU right here. Somebody may have escaped the mute button just to be safe. All right, so GU we're looking at yesterday. Explanation was given yesterday again. This candle's specific opening price. Again, I'm gonna pull a little joke for those who get it. What's the opening price on this candle? 49.12. It's closing price on the high on this. Is it? Nope, it's actually a little bit higher. So I can't make the joke. But yeah, hits it perfectly and then price trades lower. We're still in a retracement condition. Did we get to the objective of the retracement? This is enough, but this is what I'd like to see. Yeah, this is enough, but this is what I'd like to see. So now is where we sit and wait for more information. If it's going lower and we're expecting higher retracements, we start looking for where's the current drawn liquidity? So the narrative is market is that me or is that someone? Narrative is we're in retracement, so higher prices. So the delivery is bullish. Currently, we've seen that price tags a key level, air quotes, and retracing low. So the current delivery, the current context in the market is low, but I'm looking for that imbalance. So as it's trading lower, I'd be watching this to see if we close below. Hopefully not, but this is GU. Funny how I don't have anything marked up on this. Probably because it's the same thing as NAS, same structure, looking for that imbalance. EU, same idea. Imbalance. Here's a good candle there. So let's see, we have 2 minutes before the news. News in 1.5 minutes. Yeah. UK, we talked about UK yesterday and the likelihood of price trading back below this 50 level right here. And we had 1.34 tagged as potentially where the low of the week could form. So now we wait. Hasn't gotten there yet. No imbalances inside here, which means, is this open? Oh, it's open. Okay, cool. No imbalance there. What? Lots of wicks around an imbalance. This price might come to the 1 sec. This is the nothing burger, right? This is the big nothing burger. All this price action, uninterested. And silver filling in the imbalance. Would be nice to see silver trade back to this candle's opening price here, but not lower. And now let's grab M15. Where is it? The news is probably going to happen before we get there. But all good. Got my phone beside me. If I see it, I see it. So really nothing to look at here. This looks like a nice 3.5 deviation of this half. So retracement, perfect. All right, starting with AU. Here's the range we're looking at yesterday. The push that happened here, that beautiful trade that you all got and I didn't take the high, all right? If it didn't take the high, we're looking at where did it trade to and what time. So I'm gonna take this fib off for a second. This traded up to that high. So now I don't have to explain this candle. Very, very nice. You know why this candle is there, you know why it stopped there. And if you want refinements, look at the delivery inside here. The idea we talked about yesterday about when we have a low being broken and there's a whole lot of imbalances around it, price tends to come all the way back to the bodies, right? Take a look at this. We'll take a look at the lows. Oh, never mind. Trading into stuff that I shouldn't. Anyway, essentially, this candle, the range right here, not just the candle, right? My advice to study would be this up candle right here. Find the high and the low, or just even the bodies. Find the open and the close of this candle. Extend that out and back and look inside that range. You should find a whole lot of things to study, which may give you ideas that you could test, and then you should see stuff. Anyway, Naz, this was the period yesterday that I was unwilling to trade. Eventually, I did get a buy, a really nice buy yesterday. But this structure right here for me, it just says it's poorly delivered. There's way too many imbalances here. This point is the last time price rebalance, and this is very logical. We had a high displacement. I'll draw you a nice little fractal. So many, why you guys laughing at me in the chat? All right, take a look at this fractal, all right? We have a high price retraces. We have a down candle. Then we have huge displacement. Most times, when you're looking at the retracement here, switch up the color, we expect this because we had the liquidity here being taken and then a huge fair value gap right here. So most persons will look at the fair value gap alone, all right? In this context, if you take a look at where the fair value gaps are in the leg from here to here, if this down candle right here is anywhere on this side of the curve, so I'm specifically saying, or I'm specifically not saying the down candle is right here, right? It does not need to be right here. It needs to be on this side of the curve. If the down candle is on this side of the curve, when price is pushing higher to take this, the imbalance will start at that down candle. A displacement is a price imbalance. Every displacement is a price imbalance. So all of this imbalance right here, we have the imbalance overlapping with that high and that thing that I've been saying for quite a few days now. When we have price taking a high, lows formed above that, how's liquidity? If it fails to come back to here. So if we have that and the down candle is over here, like we have here, and it comes back and it taps this, this is what you want to see afterwards. Immediate respect, like this. This is M15. Yeah, I was just about to say check NAS M15, but this is M15. So if price is trading lower again, and we have this fractal in play, I would expect this here to become quote unquote key level. Whole lot of drawings. That wick there, that wick low should become a key level because it would be keying off the start or the origin of the displacement right here. If price takes this low, I'm not bullish and I'm not bearish because it could mean very likely that price is just rebalancing something that's inefficiently traded below here. But for all intents and purposes, that right there should be perfect. And if you know what the rejection block is, then you'll see this. Oh, well, that's actually not a rejection block. It's an IR. IR, is it IL? Would you expect DXY not rebalancing that daily imbalance, or is that what you were waiting for? DXY daily imbalance. This right here, there's not a whole lot of wicks involved inside here, so this can stay open. But what I was saying is, if price trades to this candle's high, I'd still be bearish on DXY. If it takes this candle's high, then something is wrong. So the fact that we don't have a whole lot of wicks, we don't even have a low being broken inside here, means that imbalance can stay open. M1 OB formed as their weekly profile for NFP weeks. Good question. I don't know, but NFP generally has a whole lot of seek and destroy. But for me, all I look at is, did Monday take Friday's high or low? And then what did Tuesday do? So in this fractal right here, I would be looking at Tuesday's high for retracement. But then this M15 is not giving me any kind of reason. There's no, Tuesday's high is very efficiently traded. Trading back here would be suspicious. If you remember why we had this here. Premium rebalanced, discount rebalanced, multiple trades back through here. This high would be one of the, so this would be like resistance broken becomes support ideas now. If it trades back to here, I'd expect it to just continue low. There we have it. Best way to explain it. So just deep retracement and as internal liquidity forcing me to look left for more data. This opening price. We have a whole lot of down candles right here, which means if there's a low anywhere over here, let's use this one. If there's a low like this, and then below the low, we have a whole lot of down candles like this. And look at the sizes of the imbalances, the down candles. If price is bearish and it's moving lower, why are the candles looking at this? This is not convincing me of anything, which means this is not true price action. Whatever the objective was, it was already gotten or obtained right here. And this is, in the words of my good friend, this doesn't exist. That opening price doesn't exist. So you'd wait for price to go back above it and then normal delivery resumes there. So normal delivery resumes here, and then look at all of this right here, ignoring everything here. Let's see if I can have a color that, this is probably not ideal. Let's get a box. And then just imagine that once this candle closed here, this candle just formed right there, and then the delivery just continued. So that would have been your lowest down candle. And then from here, it just fits in perfectly and continues. But there it is. Leon with the market orders, fill or kill. But yeah, that's what I'd be looking for. So now if you take a look at delivery around that line, we have short-term low, candle close below the low right there. All right, so let's play. Where's the candle that closed below the low? This one right here. Then we have this one. So let's use this one on principle. Right, wrong one, my bad. This down candle right there, opening price. So if you watch that opening price in line with this, that's where we should. Let's see if I can get the exact price and then make the joke. Opening price is 330, and the low on this candle is, where is it? No, 331. Okay, the joke failed, never mind. I was going to do a listen folks joke. Oh, I got it wrong? I did? Oh, it would be the low and not the opening price. Yeah. So, yeah. Either way, the joke died. The joke died. Okay. So NAS now, it's trading back inside this candle. If it's going to leave here and trade higher, faster, tongue-tied, leaving this candle's range, this down candle right here, price has to be fast. It should not trade inside this area slow unless they're accumulating. And when you look at this, there really isn't any low housing liquidity inside here for price to accumulate at. Just didn't. So listen, folks, this is not taught in books, you know. You don't know a joke? Okay. UCAT from yesterday, we're looking at price trading lower and then going higher. I didn't expect them to take this low, but here we have it. Takes the low spectacularly and then trades higher wonderfully. So we'll go back to looking for 50% right here, which is the red line at 1.37025. So now we blend the intermarket analysis that we used yesterday again. I use UCAD to confirm NAS's direction. So if UCAD has a high probability of trading higher, it means when NAS is going to leave this area, it's going to trade low. And I'd like that. I want to buy NAS below 11.4. Not interested until it gets below 11.4. So this guy trading higher opens the door for 11.4. Okay, let's take a look at this. We have previous day's range, high and low. Most persons mark previous day's highs and low, but why do we do that? Or why do you do that? Liquidity? I don't know. One of these days we should just chat about concepts and I don't know, just talk about concepts, models. Who would be willing to discuss their trade plan and all that good stuff. Okay, so this is Tuesday, this is Monday. We have a day when, we have a week rather, where Friday's low rebalanced a delivery right here. So you could look at the high, down candle, push, target the opening price for fun. Bam, hits it. Retracement. Monday doesn't take Friday's low, but then Monday starts to push, right? Which means this is the range that price is trading in. If this did not take a previous day's low, then this is not a dealing range. It's just a trading range. Well, based on my rules. If you're looking at intraday price action, then it's perfectly fine to look at lows like that and then say that sell side taken, buy side taken. But if you're looking on the larger scale of did we take previous day's low, then no, we didn't. You'd have to extend it far. We're not about that right now. So this is the trading range, right? If this is the trading range, I just need premium versus discount. Does not end from the gold segregation, does not end from the pole. Why I don't like trading gold? Oh, okay, cool. I didn't finish gold's analysis. Okay, let's take a look at gold. What did gold do yesterday? Friday as well, rebalanced. Monday pushed, created a huge displacement. Tuesday took Monday's high. So entertain this idea for a second. How to study weekly profiles. I'm going to try to split this in 5 or wherever. Maybe here. Good enough for government work. So let's call this 5 days, all right? When you're looking at weekly profiles, try to frame it like this. Where's previous week's high or low? Or where's Friday's high or low? Pick one. For this, since we're using setups where Friday's low is below Monday, I'm going to put Friday, let's say here. Let's say that's Friday. So we're opening the week and we're looking at Monday. We have Monday, Tuesday. So we have Monday and Tuesday trading higher. Tuesday particular taking Monday's high. If this delivery higher has lows that house liquidity, and then you have to make your definition for lows that house liquidity. The one I shared is, I'm my tongue tied today. When price trades to a high, displacement, retracements that create lows that don't go at or below this house liquidity. So if we take a look at this, we have push, should be straight enough. This low, no liquidity. Here, liquidity. No displacement. When did we take this? Highs that retrace above here, no liquidity. Liquidity. Liquidity taken, then price retraces. So going back to this idea here, lows created inside this that holds liquidity should be Wednesday's target. So let's say we had liquidity right here. When Wednesday trades lower, we would watch this level. If we take this and Tuesday's low, because this does not always have to be Tuesday's low. If we take this and Tuesday's low, let's say like that, then I start looking at dealing range ideas. This is just exaggeration, right? Looking at like that. Undo. I'll show you the easiest one to trade. The easiest one to trade is this one here. Let's say we have Friday like that. Friday's low, be nice. Monday takes it. Tuesday trades up, takes both of them. Wednesday, gone. This fractal is the easiest one to trade. Specifically watching Friday's low, Monday's range, all that good stuff. Hashtag not a Zoom. But yeah, the relationship between the daily dividers is always something to watch. It gives you all the insights that you need. And then if you look at smaller delivery cycles inside here, it gets way prettier. But imbalance below NAS 11400 as your eye. I'm assuming NAS is not trading below there. Oh, cool. Let's go to H1. The draw on liquidity comes first before the entry model. Always remember that rule. I like this. Off the rip, no analysis. I like this. I don't think we need to go lower than this if we're still going to trade higher. What have you done, GU? Oh, I haven't looked at GU as yet. A good way to look at imbalances, when you're looking at imbalances, so here's the gem for today. Everything needs fair value. Literally, everything needs fair value. So if you're looking at a price action that looks like this, let's say you've identified the draw on liquidity to be here, higher. And then based on what prices, ignore the actual candle, right? Just pay attention to the drawings. Let's say the liquidity draw is here, and you have anything up here that frames the price that price is drawing to. So the direction is higher, and maybe you have old high and price trades lower. Once you have a change in the state of delivery and price starts trading towards here, you don't always get this entry here, but that's fine. What you look at is when we start this push here to get to the objective, where are we creating fair value? Fair value in this case would be fair value for buying. And quite a few definitions for that. First and easiest one is we have a high, displacement, watch the lows above the highs, grab the liquidity, and we go. All right. There are more technical definitions, but this is the easiest one in principle. The next one that's very easy to trade is looking at the runs on short-term highs inside here. So price is creating short-term highs. It creates a fair value gap. Let's just call this a fair value gap, right? Fair value gap that fails to take a high. So we have a high, we have a push. It fails to take here, and it leaves a fair value gap here. This, next easiest thing to trade. Because this becomes fair value for buying, and this becomes your drawn liquidity. So it's not stalking an entry pattern. It's looking at where's the drawn liquidity and where should my entry form. When price gets here, depending on your risk tolerance, you enter immediately, or you wait for an order block to form here, and then you push. An order block like this, or if you're wondering why is this an order block and not the definition I gave you, an order block is an area of accumulation. That's where orders are being accumulated. If it's fair value to buy, or it's fear for them to buy here, and that down candle forms inside here, order block, light bulb moment. This is why if we have a low and price creates a down candle below the low, life is good because it's fair value to accumulate stops. Well, not stops, but the liquidity below here. There you have it. So you blend that with what you already know, and you should get easy. Why that one and not the low of the OB? No idea what you're asking. GU drawn liquidity. Let's find that high. This wouldn't be far-fetched. This low resting right here would be best case scenario, but then that's already hammed. Best case scenario would be here for me. And we have that nice fair value gap below it. So best case scenario refined would be around there. Take this off. But yeah, I haven't taken a trade yet. Zoom says we've been here for too long. I'm gonna be stocking some shorts, see if we can get down here. And yeah, it's been fun. Have a great day. Where am I stocking shorts? I'm gonna go to M1 now and look for rebalance.